Insurance is something everyone pays for, but almost nobody actually understands. We buy it, we ignore it, and we only think about it when something goes wrong. In this video, I'm going to explain insurance from zero. No jargon, no sales pitch, no confusion. By the end, you'll understand what insurance actually is, why it feels frustrating, and when it's worth paying for. At its core, insurance is risk sharing. Instead of one person paying a massive bill alone, a lot of people pay small amounts into a pool. When something bad happens to one person, the pool pays for it. That's it. That's insurance. Not investing, not gambling, not a scam by default, just shared risk. Imagine 1,000 people. Each person pays $100 a year into a shared fund. That's $100,000 total. Statistically, maybe 10 people get into serious car accidents. Imagine 10 people standing in a circle. Each person has a 10% chance of a catastrophic accident this year, one that costs $100,000. Now, if that accident happens, it would financially destroy them. So, they make a deal. Each of the 10 people puts $10,000 into a pool. That's $100,000 total. Now, no matter who the accident happens to, the pool covers the cost. Everyone else pays a little, so no one gets completely wiped out. That's the deal. That's the core idea of insurance. If it's that simple, why does it feel so utterly impossible to understand? Why does dealing with insurance feel like trying to read an alien language? I'm going to break it down for you, and by the end of this video, you'll see insurance not as a scam, but as a tool. There are three main reasons why it's so confusing. First, insurance companies use complex language on purpose. It's a deliberate strategy. Think about it. The harder it is for you to understand your policy, the fewer questions you're likely to ask. Confusing terms like subrogation, indemnity, and peril aren't there to help you. They're there to create a barrier. This information gap gives the company an advantage. They know what everything means, and you don't. It discourages you from digging deeper, from questioning a denied claim, or from negotiating your coverage. It's a power play, plain and simple. Second, insurance policies are not written for you, the customer. They are written for lawyers and judges. A policy is a legal contract. Its primary purpose is to protect the insurance company in court, not to be a clear, easy-to-read guide for you. Every sentence, every clause, and every exclusion is carefully crafted to hold up under legal scrutiny. Clarity for the customer is a distant second priority, if it's a priority at all. So when you're reading it and feel like you need a law degree, you're not wrong. That's who it was written for. And the third reason, most people only try to learn about insurance after something bad has already happened. Your house just flooded, your car is totaled, or you're facing a massive medical bill. This is the absolute worst time to learn anything. You're stressed, emotional, and under immense pressure. Trying to decipher a dense legal document in that state of mind is a recipe for frustration and feeling like you've been cheated. Trying to learn the rules of a game while you're in the middle of losing it. This leads to the biggest mistake most people make about insurance. They think insurance is supposed to save them money. It's not. Let me say that again. Insurance is not designed to save you money. It is designed to protect you from financial ruin. It's a safety net for catastrophes, not a discount program for everyday expenses. If you try to insure small, predictable costs, you will always feel ripped off. Why? Because the insurance company has to pay for your claim, cover their own administrative costs, and still make a profit, so your premiums will always add up to more than the small costs you're covering. That extended warranty on your new toaster? Probably not worth it. Insurance on a $10 package? You're just giving away money. Insurance works best for a specific type of risk. It's for rare events, expensive disasters, and things you absolutely could not afford to pay for yourself. Think about a house fire, a major surgery, or a car accident that results in a lawsuit. These are events that are unlikely to happen on any given day. But if they do, the financial consequences are devastating. That's where insurance shines. It's a shield for the big, scary, life-altering stuff. Now let's be clear about what insurance does not do. It does not cover everything. Every policy has limits, deductibles, and a long list of exclusions. It does not pay immediately. There's a process. You file a claim, they investigate, and then they pay, and it can take time. It also doesn't eliminate stress. Dealing with a disaster is stressful, period. Insurance can remove the financial part of that stress, but the emotional toll is still there. And it absolutely does not reward people who don't read their policy. This is the golden rule of insurance. If it's not written down, It doesn't exist in their world. You might have had a great conversation with an agent who promised you the moon, but if that promise isn't explicitly written in the contract you signed, it means nothing. Insurance only pays for what's written, under the specific conditions that are outlined. And with all the rules and exclusions that apply, you have to read the fine print. So, when is insurance actually worth it? It's worth it when the potential cost of an event would financially wreck you. It's worth it when the event is unlikely but the consequences are severe. And it's worth it when you could not possibly replace the loss on your own. This is exactly why people insure their most valuable assets. We insure our homes because most of us go in just buy a new one if it burns down. We insure our cars because a serious accident could cost hundreds of thousands in damages and legal fees. We insure our health because a single hospital stay can lead to bills that are more than a mortgage. And some people insure their income with disability insurance because losing your ability to work is the ultimate financial catastrophe. That's why we don't typically insure our phones, or cheap items, or minor inconveniences. The cost of replacing them isn't going to bankrupt us. We can handle those small hits ourselves. Insurance isn't evil. It's not some grand conspiracy. It's just a tool that is widely and deeply misunderstood. It's a business transaction. And like any transaction, you need to understand what you're buying. Once you shift your perspective and understand what it's actually for, protecting you from ruin, not paying for every little thing, it stops feeling like a scam. It starts feeling like a critical piece of your financial security. It's a difference between a minor setback and a complete financial knockout. Now that you know the what and why of insurance, you're probably wondering more about how companies make it so confusing on purpose. In my next video, I am going to dive deep into the specific tactics and language they use to keep you in the dark. If you want insurance explained without all the nonsense, make sure you subscribe and hit that notification bell. Thanks for watching.